I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Ben Butcher, the Chairman, President, and CEO of STAG Industrial. Ben, thanks so much for joining us again.
Thank you for having me.
Now, STAG maintains an active acquisition pipeline, and after a somewhat slow start to the year, activity really picked up in April. Can you talk about the types of assets that you're looking to acquire and if there's particular regions or industries that you're looking to get?
Yeah, we pride ourselves on our agnosticity. I love to use that word, with regard to assets. We're really looking for assets that will produce great cash flows, and we are willing to go to sort of anywhere in the secondary and primary markets in the U.S. where we find those. So we're really not focused on particularly we need to buy assets in California or anything like that. We do pay attention to not having too much concentration in a particular geographic region or to any lease expiration year or industry. So we're finding assets in the areas that are growing in the U.S. So we're finding assets leased to e-commerce companies, to auto companies, to companies related to home building and the like. Our portfolio, about $2 billion of assets, is again widely diversified. Our pipeline is a little over $1 billion today, and it's made up of a wide variety of assets.
Now, switching to leasing activity, are the positive trends that we saw in 2013 continuing for this year?
We've seen continued improvement in leasing. One of the macro comments about industrial real estate is absorption continues to far outpace new supply. So you're seeing, by a large margin, so you're seeing the leasing market get better for landlords. So occupancy levels are up, rent levels are up, and we're seeing more tenant activity in general. So the leasing market has continued to improve this year.
And lastly, the rise of e-commerce obviously has had a big impact on your sector, and as we hear more about the expansion of these sort of rapid delivery services, what impact will that have on companies like STAG?
Well, it's, 2 years ago you heard everybody talking about everyone's going to build 1 million square footers or 2 million square footers on the coast and do all their distribution from there. Clearly that doesn't work well in a next day, next hour delivery world. I do think that the next hour, next delivery world is still New York, LA, and a few other places, but sort of faster delivery is surely an element of that, and that's going to mean more, buildings close to population centers. Our assets are located generally near population centers, so we feel that we'll do well, and we certainly have leased buildings in the last year to e-commerce companies, and the general trend of moving assets from retail stores into warehouses, which is what e-commerce is about, is good for the industrial industry. So generally speaking, industrial activity tends to pace along with GDP, more or less track GDP. Things like the rise in e-commerce, the shortening and fattening of supply chains tend to allow in the industrial real estate sector to take more of the overall real estate business from other sectors. So it's generally good, and we would expect the industrial sector to outperform GDP going forward.
Ben, thanks so much for joining us.
My great pleasure. Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.